Good morning, everyone. This is Brad Matheny. Today is the 16th of October, and we're looking at a Wednesday. Going to be a pretty busy day for me, so I'm going to try to get as much as I can into this video for you and to show you what is actually taking place in the markets. Now, yesterday we had a very interesting counter trend day. Okay, my cycle patterns predicted that we would be looking at a gap breakaway in trending mode, bullish, explosive, bullish, bullish, bullish. Okay, guys, that's pretty much as good as we can get to the upside. Why did we get this big counter trend mode yesterday? And the only thing, after looking at everything yesterday, that I can see related to this move was this. We had a New York Empire State Manufacturing Index came in at minus 11.9. Now, this index is related to manufacturing on the East Coast once it loads here. And what we're looking at is we're looking at a pretty big miss. Okay, we're looking at a minus 11 versus a previous 11.5. You can see how we dug out of this hole, went into positive trending, and then backed out into negative trending here. I think this is probably what shook up the market. And again, this is related to manufacturing on the East Coast. Empire State Manufacturing Relative Index of General Business Conditions in New York State. And again, I think this is kind of what shook up the markets yesterday. I don't really see anything else other than, Red Book came in good. Auctions were fairly solid, right within range. And like I said, we had a Fed comments, but really nothing else kind of shook up the market. So, other than a broad pullback. Now, I will show you this. Come back over here to the SPY chart. And we had, looking through some of my custom indexes here, you can see this is what I call the general market index using my Ment rotational modeling system. Good solid trending, still in bullish trending, no real issues, no real pullback. When you take a look over here at the tech sector, and you can see big pullback yesterday. Look at this bar on the right side of the chart right here. Big pullback right over here. Big pullback right down here. Now, on a weekly basis, it's not so bad. Look over here. On a weekly basis, not bad at all. And that's why I think we're going to see this continue to move to the upside today. I think it was just kind of a flush out on yesterday's New York Manufacturing Index. And I believe we're going to be looking at a fairly solid carryover trend. And remember, next week we have a very similar type of setup. Gap breakaway, gap potential, gap reversal, gap breakaway, rally. Now, we do have two counter trend bars on Tuesday and on Thursday. So, again, that's why if you take a look at what I've done here, so here's our Wednesday trading, Thursday trading, Friday trading, Monday, Tuesday, Wednesday, Thursday. I think Tuesday and Thursday of next week are going to be counter trend bars. And I think what we're going to see here is a fairly solid rally moving into this bit of a rotation here. We've got a back over here, a breakaway in carryover mode in bullish, and then we've got a carryover mode. So, this slight pause that occurred right here, I was expecting, because markets just don't go straight up. Very rarely do they go straight up or straight down. So maybe this pause took place back over here. Maybe that's what ended up happening. That pause that I was expecting took place a little bit early. And now we might be looking at this kind of a rally phase here, moving up into this rally phase up here, looking for this sell really right up here. So we'll see, because if the markets rolled on yesterday's news and we get a carryover, a breakaway today, a carryover tomorrow, and a temporary bottom on Friday, we could be looking at a nice solid Wednesday, Thursday, and then kind of a rolling bottom over here into a Friday mode. So I'll get rid of this. And that would be my interpretation right now. If we flushed out right here yesterday because of that unexpected New York Manufacturing Index news, that was kind of the flush out that I was expecting here on Wednesday. I expected it because markets just don't go straight up and or don't go straight down. The only reason they go straight up or straight down is if there's a massive crisis or, some kind of a massive stimulus. So what we're looking at here is really the potential that that flush out that I was expecting on Wednesday occurred to yesterday on Tuesday. And now we're looking at a potential rally phase that may last 1, 2, 3 into Monday of next week. This is Wednesday, this is Thursday, this is Friday, and this is next Monday. We may see this move consistently up into the 595, 596 area. Now, I am not, altering. Well, yes, I'm altering the analysis based on what has actually happened and based on my interpretation of what has happened. We have to, readjust our roadmap simply because something changes and we don't adjust to what has changed, then we need to be, kind of kicked in the head. So, yes, I am going to alter this in this manner, suspecting that we have this change, this pullback that I expected on Wednesday may have actually taken place on Tuesday on data. Now, economic data today, I don't see any, and we'll see. We'll be getting into jobs data. Here's the mortgage index. Mortgage applications collapsed week over week. We have export prices, import prices, and then we have more Fed comments. Fed President Lagarde or ECB Lagarde speaks, and Fed balance is coming in. And then tomorrow we should be getting into jobs data. Yep, jobless claims, Philly capex index, retail spending. Now remember, we're moving into, the election. So there's going to be some, type of consolidation rolling into this. So this melt upward trend, I think, is going to become really more of an issue out over here because I believe that earnings, when you take a look at earnings have come in very solidly so far. Yeah, I mean, slight misses, 8.68 or 86 billion, 6.86 billion versus 6.9. It's it off by 400,000, 4 million. Here's another one, 1.9 versus 1.94. Otherwise earnings I think are going to come in fairly strong. And look, we have Netflix over here on Thursday. I think we're going to get very strong numbers again. I think that the economy is tightening up. I think it's moving into apprehension. I think it's moving into stalling, but I don't think that's going to affect the real mechanics of the market, which is the US market is strong. The US dollar is climbing. Gold is climbing. We're still the U.S. market is still the 900-pound gorilla. So I think we get this moderate melt up. And again, my patterns suggest that is the case until we get into next week. So we have a breakaway in carryover mode, a carryover in trending mode, and a temporary bottom in trending mode. I think we're going to continue to see this melt upward. And I'm going to go to the QQQ. Get rid of this real quick. You can see the QQQ was a very solid pullback. Now, again, remember, I expected this little rotation, okay? And I expected that buy here pattern. Ideally, maybe we did this. Maybe we rolled into that rotation pattern here, and maybe we're looking at that buy trigger to be off of today's lows, kind of having my expectations shift forward one day and rolling into this rally phase to the upside. So I'm going to give you guys a bit of a heads up here, indicating that the shift appeared to be yesterday very related to technology. Technology was really something that collapsed yesterday. And again, I'm looking around, I'm trying to figure out what's going on. All I can see is that New York manufacturing data seemed to be some sort of an impetus for the move downward. I don't recall seeing any other major news events, but again, my research still suggests that we are going to continue to melt upward. So if we were to look at where we're at here, I would imagine technology and the NASDAQ QQQ moving into this type of a sector, maybe melting slowly upward to this 505, 506, 507 area. We'll see how it plays out because, like I said, I think that we just shifted. I was expecting the pullback right here on this red bar. I think it just happened one day early, and it may have been news driven. It may have been event driven, but we'll see. We'll see if we resume into a rally phase here. I'm still expecting a rally phase. And if this plays out the way I expect, then we're going to be looking at a rough buy trigger here, moving this to the sell mode up here, which we already had marked, and then a buy down here. So if this shifting took place early, we're gonna be aware of a solid buy mode the rest of the week. Okay, gold had a nice rally yesterday, still rallying today. Gold pattern, remember, pushed higher. We had a top pattern with explosive accumulation. Today is a flat down day. Today is a top day. Yesterday was a blank. What is this? Tuesday, Wednesday. Today is a flat down day. And so a flat down day, given where we're at, this is the 16th, it's moved up. A flat down day would indicate that we are likely going to be seeing some sort of consolidation today in gold. You can see that we've kind of rallied up, and what we would be expecting on a flat down day is some rotation into consolidation as I've drawn, and then into some rally mode. So we'd really be looking for a bottoming section right over in here. And make this yellow. And that's what we're looking at again with this flat down pattern in gold. So we're really looking for gold to kind of consolidate here for maybe a day, 24 hours, day and a half, and then start to rally back out. Now, that could be that the US dollar rallies. The dollar's up above 103 again. I remember people telling me, 2 months ago that the dollar was going to fall. And I kept arguing that the dollar was going to go higher because the dollar is the safest, most secure global currency on the planet right now. And again, if you follow my subscriber content, if you are a subscriber, then you'll know my expectations with regard to what the Fed is doing. And I'm just going to tell you right now, if you're not familiar with it, we have a predator Fed activity. We are seeing the Fed act in a manner that is very, I don't want to say unusual, whether they're dope walking or not, I don't know. Meaning, when I say dope walking, that means that they're, leading the market into some type of activity uh, that they are either planning or inadvertently dope walking them into. But we're actually having a predator Fed activity right now. The Fed is doing what they need to do, but it's acting as a predator, almost setting a trap for foreign market central banks. And whether they did this on purpose or whether they're doing it inadvertently, I don't know. But I can see the long-term contagion event playing out. And that's why gold has such a great opportunity right now, gold and silver. So anyway, go back over to silver. Nice solid rally, just what we want to see. We are, again, you can see that I highlighted this rally rolling up into this phase. We're now into this phase. We rolled into that consolidation period. And what we're looking at here, guys, is really to see how silver plays out around this 32.50 area, 32.25. I would suspect now that we've broken out of this channel, remember, this was an important channel playing out. We had this lower flagging formation. We had this excess phase peak come back into flagging. Understand that we are now into potential consolidation, which is going to last maybe a day or so, rolling out, and then we will move up to what's called the ultimate high. We are going to get that move unless silver breaks back here to the downside, which I don't see happening. I see a fairly solid rally taking off into weakness and into that predatory Fed mode. So very solid move in silver. Really, as long as this move in metals continues to persist, we're going to be looking at a very solid rally in metals. I mean, it should be very exciting with silver potentially, again, potentially moving up into this 35 to 36, 37 area. So get ready. This move to an ultimate high here may be a good, solid, extended rally up into 34, 35 before the election. And then we could get really exciting and move up to 40, 42 before the end of the year. Okay, and then lastly, we have Bitcoin. Bitcoin has continued to move through this peaking level, through this consolidation. We had this spike. Let me go ahead and show you here. Yesterday afternoon, after I talked to you in the morning, remember I was talking to you in the morning about how this consolidation pattern would probably play out before we would get some sort of a rally. We had this huge spike at about what time? 9:30 in the morning, right at the open. Could have been related to that news, could have been related to something else. But this spike and this big pullback, have presented a very solid retracement level. So understand that we're kind of at this level here. I would suggest that that level, that peaking level, I'm going to make it a bright red, could be the final push to the ultimate high. Now, it could go higher. It really could go up into the $69,000, $70,000 area. But right now, this level, it represents the potential of, I'll just copy this, potential of a wave 5 peak. So ideally, folks, if we push above the 68,000 level, we're looking at a solid rally up into this 69,700 area. But I would be cautious of a topping pattern right here, setting up. This is a very solid indicative double topping formation. We're already completing the wave 1, wave 2, wave 3, wave 4, and potentially wave 5 pattern. We may never see Bitcoin get up to this level. So be aware, we are moving into a very interesting mode in Bitcoin. We have completed or nearly completed the 5 waves, reaching the ultimate high. This may be the ultimate high. It is a big breakdown here. Although we could, and again, this is a very last little bit of trending, we could continue to trend upward into this area, but we are already into wave 5. Okay. Bitcoin has moved out of the wave 4 structure by breaking above like this and coming back and then rallying through it. We're already into that what's called breakdown to ultimate low in a normal pattern. This is an inverse pattern. So it's going to be a breakaway to an ultimate high. We're looking for an ultimate high, which is going to be more than likely out in this area here. And make that red. Or we've already reached it right here. So be aware. If you caught any of this move and you're still long, run a decent trailing stop moving higher. Right now, as you're rallying, you should have a stop probably right down in this area, basically trailing upward. And if we get up into this level, I tell you to pull profits, trail your stop a little tighter, and prepare for a bit of a rotation. I think we're very close to running into some sort of an ultimate high here. Kind of the same thing that I would expect with gold. Gold in a way is moving just like Bitcoin as a hedge right now. You can see the inverted pattern, the flagging. Now we're moving into that consolidation period over here, which is where, oops, go away. If we come in here for the peak, the number one, and then we come in here for the flagging, number two, and then we look for the break of flagging to set up consolidation, which would be right here, number three. We would then be looking for the consolidation to break away into a new high formation, which would be this. So we would watch for this potential consolidation to break right here. That would be our number four. And then ultimately we would be breaking towards a new high. And the new high potentially could be way out here. So understand that we're looking at the same type of pattern here. We obviously didn't get this. And remember, it's always about A and B structures. So what happens if we're expecting, what we're expecting at this point is a bit of consolidation, a bit of basing, and then rolling into this expansion phase, carrying all the way up to potentially the ultimate high back over here. So how does that play out with our excess phase peak pattern? Well, very clearly, you can see we've got the low coming up into flagging, into our breakaway, into our consolidation, into our rally. This would be our rally breaking away from consolidation, moving up into potentially the ultimate high area, up into this area. So again, everything plays out in kind of an orderly structure, and we're basically just looking at price, looking at patterns. And then, like I said, really, a lot of the times I watch for these flagging formations to determine where we are in the broader pattern. So you can obviously see this bigger, broader pattern. And, if I were to scroll all the way out, I'd be able to see more patterns. But this big, broad pattern is playing out very efficiently into the phase three, moving into consolidation next into phase four. And then we should get that buy trigger right in alignment with a potential breakout to the upside, moving to an ultimate high, which could potentially be a move from roughly here up into here. It's about a $70-$80 move, maybe more in gold. And I believe that Bitcoin has actually already made that move. It's already moved out of the phase number one, through the flagging, into consolidation, broken out of consolidation, and we may already be at the ultimate high or close to the ultimate high, trying to push above it. So you got to watch Bitcoin right now to find out if this 68,000 level is going to become resistance. If it is, then get ready, because what will happen is you will start to set up a new flag. You will get a move like this, which could have already set up a peak, a pullback, a flag. Trying to make these blue so you can see them. Sorry, I got the sniffles this morning. Like this. And then potentially we would be flagging out at this level, moving down to get to this level, consolidating, and then moving potentially downward to an ultimate low. So if we look and see the potential for a flag or the potential for this to carry up, pull back, and then flag. We could already be in a new excess phase peak pattern. We're looking at flagging potentially already. And or we've got to see if we get above this level. If we get above this current high, which would be an extension up to this level, we could set up another excess phase peak pattern up here. So again, trying to show you what I see, calling it like I see it. You know, there's a very good chance here if we fail at this level, if we can't get above the 68,000 level, then be aware that we could be setting up a very solid excess phase peak rolling back to the downside here. Okay. All right, I'm going to end it there. 25 minutes, go back to SPY and make sure to try to get some today. If my analysis is correct, we could be looking at a good, we could be looking at a good solid rally in the SPY over the next 4 or 5 days. Okay, guys, off to my cup of coffee. Go get some.